The Foschini Group technical analysis. We're on the monthly chart, and in regards to the monthly chart, we can see that the market has given us this very nice overextended M structure. It's an overextended M structure because that first leg is much higher than that second leg, and it has a neckline at that point. And if you look closely, we can see that the market closed below this neckline, and what we expect to happen next is for price to continue to move further down to around this level over here. Why do I say this level? That is because the M structure started more or less at this level, right? Went up, gave us this very beautiful M structure, and then the anticipation is for the market to continue to push further down to around this level over here, right? So what I'm saying in other words is that in my humble opinion, buying is not such a good idea because there is plenty of scope for the market to continue to move further down. Another reason that motivates for why the market needs to continue to move further down, in my humble opinion, is that if you look closely, we actually have a W structure over here. And I've said to you guys multiple times that whenever we have W structures, what normally happens is that a lot of traders and investors buy on that second leg of that W structure and they place their stop losses below, right? And I've also mentioned that stop losses are actually liquidity, and liquidity is money that needs to be triggered by the market at one point or another. So as I've said, because we have this W structure, we have a lot of stop losses that are sitting in and around this area, and we may potentially see the market push further down to grab all of those stop losses, and then we might then see the market push further up, and this would give us a very nice W structure. I hope you guys can see that it would give us a very nice W structure. So what I'm doing, guys, at this point is just speculating. I'm not necessarily saying that the market will unravel in the minute in which I've just described. I'm just showing you some of the possible outcomes that we may experience in as far as the Foschini Group chart goes, right? Anyway, let's proceed. So what I'm going to do next, guys, is just to add a neckline for that M structure. So we could say that this is the neckline of our M structure. And just remember that necklines are areas and not so much actual lines, right? So in other words, we could say actually that this whole area over here is the neckline of this M structure, right? But just for the purposes of keeping our charts clean, I'll just make it a line just for now, right? But just bear in mind that necklines are areas and not so much actual lines. So we could say, as I said, that this is the neckline of our M structure. And I've also mentioned to you guys that whenever we have these M structures, right, we want to see price breaking to the bottom side of that neckline, heading back to the neckline to test it. And at this point where the test happens is where we look for those potential selling opportunities, right? Anyway, from here, what I'm going to do is head down to the weekly chart. However, before I do so, I just also want to point out that we have this candlestick over here. It is a bullish candlestick with a small body and quite a long upper wick. And what it tells us is that at the top where that wick ends, there's a lot of liquidity there. And I've said to you guys that liquidity is actually money that needs to be triggered by the market at one point or another. So what this means is that in the future, we will see possibly the market coming back up to grab that liquidity, right? So as I've said, guys, in my humble opinion, we should start looking for those potential buying opportunities once the market reaches this point. Potential buying opportunities. I'm not saying that we should just buy by virtue of having price reach this zone. I'm saying at this zone is where we should start looking for those potential buying opportunities, as the market may give us this very nice potential W structure. Can you guys see that? Anyway, let's proceed from here. As I said, I'm going to head down to the weekly chart. And here we are on the weekly chart. Let's have a look. What do we see on the weekly chart? And just to recap, guys, remember on the monthly chart we spoke about this huge M structure which has a neckline. At that point we saw price breaking to the bottom side of that neckline, coming back to the neckline to test it, and at this point is where we would have looked for those potential selling opportunities, because after all we are in a downward trending market, right? But what do we see on the weekly chart? What do we see on the weekly chart that we should be paying attention to? On the weekly chart, we can see that we have, if I can just mark it, we have this area over here. It's a very strong area of resistance, and at this point is where we may look for further selling opportunities, right? Actually, we could actually say that we have an M structure here which also has a neckline at that point. We can see actually that price broke to the bottom side of that neckline, and that it's now heading back to the neckline to test it. And at this point is where we may look for those potential selling opportunities. This is more for traders than for those who invest in the stock market directly. Yeah, that at this point we should potentially look for those selling opportunities. So what I'm going to do now is just add a neckline for that M structure, and just bear with me guys while I do so. So we could say that this is the neckline of that M structure, which is let me just draw it, which is over here, right? Can you guys see that the neckline is at that point, right? So what I'm going to do now guys is just to utilize the Fibonacci retracement tool, just to see if that neckline aligns with any key numbers that we have on the Fibonacci retracement tool. So let's have a look. There we go, more or less. And guys, can you see that our neckline, let me just actually draw it properly. Can you guys see that the neckline, which is over here of this M structure, more or less aligns with the 50% Fibonacci retracement level, right? So what this tells us is that we have confluence in as far as looking for potential selling opportunities at this point goes. Number one, we have this M structure. Number two, we have price breaking to the bottom side of that neckline and then coming back to the neckline to test it. And number three, we have the neckline aligning with the 50% Fibonacci retracement level, right? I hope that makes sense. Yeah, so we have confluence. Nonetheless, having said that, I'm not necessarily saying that we should just buy or rather sell when price reaches that line. No, all I'm saying is that we have more reasons for why we should be looking for those potential selling opportunities at that point, and that we need further reasons for why we should be looking for further selling opportunities at that point, right? Anyway, let's proceed from here. I'm just going to head down to the daily chart and let's see what's happening on the daily chart. And here we are on the daily chart. And on the weekly chart, we spoke about how we have this M structure with a neckline over there, and we said that price broke the bottom side of that neckline and then is in the process of heading back to the neckline to test it. And we have the neckline also aligning with the 50% Fibonacci retracement level, and that at this point we should potentially be looking for those selling opportunities, right? So what else do we see guys on the daily chart? On the daily chart, we can see that we have a gap at this point, and that gap needs to be filled at some point, right? And remember also that gaps represent liquidity, and liquidity is actually money that needs to be triggered by the market at some point. So there's a lot of money where that gap is, and what may possibly happen is we might see price hit up just to close that gap, just to trigger all of that money, and then potentially, you know, push further down, because we also have another gap at this point which is also carrying a lot of money that needs to be triggered by the market, right? So that is it as far as my analysis goes. I hope it makes sense. Chances are we're going to see the market continue to push further down, right? If it doesn't happen at this point, it'll most likely happen at this point over here, right? But in as far as buying goes, I would say, in my humble opinion, that we should not be buying. We should rather wait for the market to reach this low over here, right? And at that point, that's where we might see the market give us that very nice, you know, W structure, right? I think we should start looking for those potential buying opportunities at this level over here, right? Anyway, that is it as far as my analysis goes, guys. Remember, all I'm doing at this point is just speculating. I'm not necessarily saying that you guys should just buy or sell just based on what I've just said. You also need to do your own homework, and you also need to look at fundamentals, and do your own fundamental analysis, and make sure that you make informed buying and or selling decisions, right? Anyway, that's it, and peace out everyone.